back with WeMasterTrade fam. It's me, Scarlett here, and I'm beyond excited to be here with you today for another incredible live session. Whether you've been with us for a while or this is your first time joining, buckle up because we got a jam-packed session full of insights, strategies, and the kind of tips that will take your trading game to the whole new level. Who's ready to crush it today? So let's get some love in the chat. Drop your favorite emoji and hit that like button. And let me see where you're tuning in from, whether it's New York, London, or Tokyo, or anywhere in between. We want to hear from you. The WeMasterTrade community is global, and today we're all in this together. And hey, if you're not subscribed yet, you know what to do. Smart that subscribe button and stay in the loop for all the tips and tricks that will help you level up. Alright, I love the energy already, and we got traders tuning in from all over the world, and it's awesome to see everyone coming together to share, learn, and grow. And let's get that momentum going because today's session is going to be the next level. We got some special guests who are here to share their stories and strategy that's helped let them rise to the top of the game. So trust me, you don't want to miss a single word. First up, I have the honor to introducing Raf, an absolute beast in the forex market. Raf has been mastering forex trading for over 2 years and a half, and he's here to share some serious valuable insights with all of you. Raf, how's it going today?
Hey Scarlett, I'm feeling fantastic and thrilled to be here. It's always wonderful to engage with the WeMasterTrade community and discuss the successful approaches I've recently adopted. I'm eager to delve into some of the strategies I've been applying in the forex market.
I love that energy, Raf. I know our audience is pumped to hear all about your forex journey. But before we get into that, let's not forget about our next guest, Helen. Helen's been dominating in the fund trading scenes, especially in the high-stakes world of crypto and stocks. So Helen, how's it going?
Hi Scarlett, I'm equally excited to be here. This session always offers fresh topic for discussions, and today I'm thrilled to share some of the strategies that have been effective for me in fund trading. It's going to be an engaging session.
That's what we love to hear. So for everyone watching, make sure you got your notepad ready because Raf and Helen are about to drop some serious knowledge bombs. We'll be diving deep into their experiences, challenges, and the strategies that have them thrive in the fast-paced world of trading. Alright, Raf, let's get things off with you. You've been trading Forex over 2 years and a half now, right? And I know the Forex market can be a bit of roller coaster. Can you tell us how you got your start in Forex trading and what led you to choose WeMasterTrade as your platform?
Certainly Scarlett, I began forex trading about 2 years ago, and what captivated me initially was the market vibrancy and perpetual activity. The forex market is exceptionally dynamic, and I was attracted to the concept that there is ongoing potential for success regardless of the circumstances. When I first discovered WeMasterTrade, it immediately resonated me with as the perfect match. The resources they provide, including sophisticated technical analysis and access to real-time data, truly impressed me. However, it was the community aspect that clinches for me. WeMasterTrade places a strong emphasis on aiding trader success by offering essential tools and support to advance regardless of your starting point.
That's fantastic, Raf. It sounds like WeMasterTrade has really helped you evaluate your game. Now, Forex is known for its volatility, and sometimes that can make or break a trader. How do you handle the ups and downs of the market without letting the pressure get to you?
Well, great questions. Volatility can be challenging, but it's also where the real opportunities are. The key is having a solid risk management plan. I always say you have to respect the risk. It's important to stay disciplined, and WeMasterTrade risk management tools help me do that. Their real-time alerts and customizable risk parameters allow me to react quickly but with control. When the market moves fast, you have to stay calm, trust your strategies, and not let emotion take over. And for me, that's where WeMasterTrade's features really shine.
That sounds seriously valuable insight, Raf. Managing risk and staying cool under pressures is is definitely key in forex trading. Now, Helen, let's switch gear to fund trading. You've been crushing it for nearly 2 years, specializing in long-term strategies. Can you tell us what drew you to fund trading and how it differs from other forms of trading?
Actually, Scarlett, fund trading zero around strategies, long-term growth. It's not about seeking quick win, but constructing a portfolio that can steadily advance over time. What truly distinguishes fund trading is the need to consider both short-term and long-term perspective. Carefully risk management is crucial, while substantially keeping an eye out for emerging opportunities. WeMasterTrade's real data and analysis tools have been instrumental in achieving this balance. They enable me to make well-informed decisions that align my long-term strategy, even when the market presents unexpected challenges.
I love that. Fund trading definitely seems like it requires a lot of patience and foresight. Helen, how do you stay focused on a bigger picture, especially when the market gets rocky?
Patience is paramount in fund trading. The market experiences fluctuations, but short-term up and down shouldn't decay your long-term strategy. A crucial lesson I learned is to maintain emotional detachment. Don't get overly excited when things are going well, and don't panic when the market dips. Women today risk management tool assist me in staying disciplined even during volatility. I can set a precise risk parameter and have a peace of mind knowing that I'm not overexposed even when the markets behave unpredictably.
That's such a solid advice. Keeping your emotions in check is definitely a key part of being successful in trading. You both have shared some serious gems so far, but let's talk about the tools that help you get to where you are today. Raf, can you share one specific feature on WeMasterTrade that's been a game changer for you in Forex?
Well, definitely a tool I absolutely rely on is the account insight features. It offers up to the minute data on how my account is performing, and I use it to observe patterns, evaluate my trades, and make better informed choices. Whether I'm pinpointing the best time to enter the market or deciphering market trends, this tool gives me an edge. It has enabled me to spot opportunities that I may not have noticed otherwise.
That sounds like a total game changer. Having a real-time insight is crucial, especially when you need to make quick decisions. Helen, how about you? What's been your go-to tool in fund trading?
For me, it's all about the risk management tool. They allow me to customize the amount of risk I'm willing to take on any trade. This has been key for me, especially in a volatile market like crypto. We want to help me stay disciplined and in control, ensuring that I never take on more risk than I'm comfortable with. That's what keeps me grounded, even when the market is going wide.
Risk management is so important, especially in today's fast-moving market. Whether you're in forex or fund trading, having the right tools make a world of difference. I hope everyone takes notes because Raf and Helen are dropping some serious pro-level insights today. Well, alright traders, we're digging things up a notch because it's time to dive into one of the most powerful features here at WeMasterTrade, the package comparison. Whether you're a fresh-paced newbie eager to get your feet wet or a seasoned pro looking to scale your game to a new heights, this segment is for you. This is where you'll find the perfect trading package to match your goals and take your trading from good to great. Now, let's be clear, here at WeMasterTrade, we know there's no one-size-fits-all in trading. Every trader is unique and with different styles, risk tolerances, and strategies. That's why we offer multiple customizable packages to meet you exactly where you are in your trading journey. Whether you're aiming to high risk and high rewards or you prefer the steady, methodical approach, there's something here for you. And to break it all down, I got the awesome Raf and Helen, two of WeMasterTrade finalists. They both worked closely with these packages and are here to give us on the inside scoop on how to leverage each one to its full potential. So drop a hit if you're ready to find out which package will take your trading game to the next level. Alright, let's jump in, Ralph. You've been with WeMasterTrade for a while now, and you're seeing firsthand how these packages can elevate your trader's experience. Can you kick things off by walking us through how both new and experienced traders can benefit from the package comparison, and why is this such a game-changing feature in WeMasterTrade experience?
Absolutely, Scarlett. I really enjoy discussing these packages because it's where traders can truly customize their experience. The package comparison features simplifies the process for traders to understand precisely what they are getting. When you visit the website, there's a detailed comparative overview of each package that includes information like the initial balance, profit targets, daily loss limits, and more. All these essential details are presented in a straightforward, easy to navigate table. It's all structured to assist traders in selecting the best tool for their success. So let's talk about the standard package, one of the most popular options. This one is great for traders who got some experience and are ready to level up. You start with an initial balance of up to $200,000, which gives you plenty of room to trade confidently and make strategic moves. The profit target is set at 6%, which is perfect for traders aiming for steady, sustainable growth, and the daily loss cap is 4%, so you've got enough breathing room to ride out market swing without stressing too much. It's an awesome balance between opportunity and security.
Well, that sounds like a perfect stepping stone for traders looking to level up without jumping too deep too quickly. A $200,000 balance and a solid 6% profit target give you a ton of flexibility to build momentum. But for those who are looking for something a bit more thrilling, let's talk about a 5-10-10 package. Rap, I hear this one's favorites for high risk, high reward traders. What makes the 5-10-10 such a standout?
Well, the 5-10-10 package, now we talking big price, like the standard package you start with $200,000, but this package is for those traders who are ready to take on bigger risks for bigger rewards. The daily loss cap is 5%, giving you more flexibility in how you handle the market. But here's the kicker, the profit target jumps to 10%. This is perfect for traders who have confidence in their strategies and are looking to make those major gains. It's all about having a higher tolerance for risk in exchange for bigger payouts.
Now that's what I'm talking about. 5% loss cap and a 10% profit target. That's definitely for traders who aren't afraid to go big and swing for the fences. But what if someone's looking for something more relaxed? Maybe they want something simpler without all the pressure of hitting specific profit targets. Helen, I've heard about the 5-10-0 package. Can you break it down for us?
Absolutely, Scarlett. The 510 package is ideal for the traders who want a straightforward, no-nonsense approach. You start with a $100,000 balance, but here's the cool part. There is no profit target. You can trade freely without the threat of hitting specific percentages. It shows you the market in your strategies. The daily loss cap stays at 5%, giving you some structure, but the beauty here is that allows the trader to focus on consistency without worrying about specific growth.
Wow, that sounds like a dream for traders who want to trade without all the restrictions. Total freedom, no pressure, just you and the market. Now, Helen, what about those traders who want a bit more control over their risk management but still want to play in the high-stake arena? What can you tell us about a 5-10-10 no PC package?
Okay, the 5-10-10 no PC package is perfect for traders who want more control over their trades. You too got a $200,000 starting balance and the 5% daily loss cap, but the flexibility is the real selling point here. This package allows you to tweak and adjust your trading parameter to match your style and risk management preferences. Whether you react to market changes or want to experiment the different strategies, this package gives you the freedom to adapt without losing the safety net of risk management.
Wow, flexibility and control in a volatile market, that's huge. I love how these packages are giving traders more ways to adapt and grow. Now we covered a lot, but I've been hearing whisper about something really special, the custom package. Raf, tell us what makes the one so exciting.
Okay, the custom package is where things get really exciting. This is for the traders who want it on full control, full customization, and a massive starting balance. You get a jaw dropping for 100,000 initial balance. Yes, for $100,000. But that's just the beginning. The real beauty is that you can customize everything: direct loss limits, overall loss limits, and even your profit target. It's perfect for traders who know exactly what they are doing and want to craft a trading experience that matches their exact needs. It's the ultimate in freedom and control.
$400,000 starting balance and the ability to customize your entire trading experience. That's next level trading. Whether you're a risk taker or a methodical trader, the custom package sounds like the ultimate playground for those who want to take their trading to the stratosphere. Alright traders, let's quickly recap. Whether you're just starting out uh, with a standard package, going for bigger rewards with the 510 package, enjoying full freedom with 510, taking control with 510 no PC, or customizing everything with a custom package. WeMasterTrade has the perfect option for you. The only question is which one is calling your name. Head over the package comparison section on our website right now and check it out for yourself. We got a packages designed to fit every trader, no matter where you are in your journey. Let us know in the chat what package speaks to you, and our team is ready to help you to get started. The future of trading is in your hands, so let's make this happen. Alright traders, this is where the magic happens. We talk about the packages and how you can jumpstart your trading journey with WeMasterTrade. But let's be real, success in trading isn't just about the package you choose. It's also about understanding and sticking to the rules. The conditions we set at WeMasterTrade are designed to not only keep you safe, but also help you grow and take your strategy to the next level. Now, whether you're just getting started or you've been trading for years, these conditions will act as your roadmap. So let's dive into the rules that define our trading environment, because if you understand the rules, you can master the game. First up the list, and arguably one of the most important, the daily loss limit. Well, Helen, you've been through it all, the highs and lows. Can you kick things out by explaining to everyone how this daily loss limit works and why it's so crucial for managing risk?
Absolutely, Scarlett. The daily loss limit is one of the most essential protection any trader can avoid. It serves as a daily cursor breaker to prevent you from suffering significant losses on a challenging day. The concept is quite for us. There is a limit to how much you can lose in a single day of trading, and it's determined by the greater of two values: your account balance or your equity at the beginning of the day. Okay, let me break it down with an example so everyone understands it clearly. For the first example, let's say you got a balance of the 105,000, but due to some open trade, your equity, including floating profit and loss, is 107,000 at the start of the day. If you're working with a 4% daily loss, that means you can lose up to the 4,000 if your equity falls below the 103,000. You don't trading for the day. The next example, on the flip side, if your balance is 100,000 and your equity is 99,000, the same 4% loss limit could mean your account could be liquidated if your equity dips below the 96,000. The point is, the daily loss limit is there to make sure the bad day doesn't whip you out completely. It's about rotating your account and giving you a chance to regroup and come back stronger the next day.
Got it. So it's like an insurance policy for your trading day. You hit that limit and boom, you're out before things get out of hand. But what happens if trader accidentally crosses that line? Can they keep trading?
Great question, Scarlett, and the answer is no. If you breach the die loss limit, your account is automatically liquidated. On your own position will be closed and you won't be able to trade again, or unless you buy a new trading package. So here's the thing, this liquidation is automatic and immediate. It's designed that way to prevent further losses. But here's a word of caution, market fluctuation can sometimes cause you to lose a bit more than the limit, depending on how fast the market is moving.
Oh, it's like a hard stop. Definitely something traders should keep an eye on to avoid. Now that we understand that what the daily loss limit is and what happens when it's hit, so the next question is how to avoid hitting that limit in the first place. Helen, you've been trading changes for years. Can you share some practical strategies that trader can use to stay within their daily loss limit with all ears?
You got it, Scarlett. Staying within the daily loss limits is also about being disciplined and following a solid risk management plan. Here are the few key strategies that have worked wonder for me and countless other traders. First, and I can't stress this enough, overview a stop loss. I know it sounds simple, but it's absolutely critical. The stop loss ensures that if the market moves against you, you are out of the trade before things get out of hand. Think about as you safety net.
That's like setting up a guardrail on a mountain road, right? It's there to stop you before you go off the cliff.
Exactly, Scarlett. It's the extra layer of protections. Now, the second strategy is position sizing. This is where a lot of traders slip up. You should never risk too much on a single trade. A good rule of thumb is to risk no more than 1 to 2% of your account balance per trade. This way, even if the trade doesn't go your way, you are still far from hitting your daily loss limit and you can keep trading without any major setbacks.
So it's like building your defense. You don't put everything on one plate, right? You spread out the risk. Makes sense. But what about those movements when traders feel tempted to trade after their losses? You're not trying to get it all back in one trade.
Oh, that's the big one. Chasing losses is one of the biggest mistakes traders make, especially newer ones. This brings me to my third strategy, don't chase losses. If you're having a tough day, take a step back, the market will only be there tomorrow. If you start chasing losses, trying to recover too quickly, it's easy to make emotional decisions that lead to even bigger losses. And before you know it, you hit that daily loss limit and you are out for the day.
So true. So it's like trying to sprint when you already won it. You're more likely to make a mistake. Now, Helen, these strategies sound spot on, but how do traders stay mentally strong when things aren't going their way? What keeps them from falling into the emotional trap of chasing losses?
It's all about mindset, Scarlett. Trading is just as a mental game as it's a number game. You got to stay calm and focused. One trick is to always have a trading plans before you even play a trade. That's why when things get tough, you stick to the plan and avoid making impulsive moves. And if you find yourself getting emotional, just stop. Take a break, step away from screen and reset your mindset.
Thank you, Helen, for those incredible tips on managing daily loss. Now, let's shift our focus to another critical element of risk management, the maximum loss limit. This limit is like your long-term safety net, ensuring that you don't deplete your account over time. Unlike the daily loss limit, which resets at the end of each day, the maximum loss limit will cumulative. When you reach it, your account will be locked and your trades will be closed. Well, to dive deeper into this, let's discuss how the maximum loss limit works and how it is calculated and why it's essential for traders at every level. Whether you're a new trader looking to minimize risk or an experienced trader scaling your strategies, this limit ensures that you don't go beyond a point of no return. Helen, I know you got some great insights into the mechanic of the maximum loss limit. Could you walk us through how this rule works and what traders need to keep in mind that they plan their trading strategies?
Of course, Scarlett, the maximum loss limit is a vital rule that's often overlooked but extremely important. Essentially, it dare to prevent trader from experiencing catastrophic losses by capping how much you can lose across the life of your trading account. Let's break it down. The maximum loss limit ensures your account equity never falls below the 94% of its initial balance. So if you start with a balance of 50,000, your account will be closed when your equity falls down to 47,000. That's a total allowable loss of the 3,000. However, it's not all bad news. If you start making profit, the limits adapt, giving you more breathing room as your equity grows. For example, if your account balance increased to the 52,000 and you now make 2,000 in profit, your new maximum loss limit would then allow you to go up to the 5,000, and you're essentially locking in those gains. The maximum loss limit acts as a long-term safeguard. It is designed not only to protect your account but also encourage disciplined trading by setting boundaries. The goal is to ensure you don't take yourself into a hole that's too deep to recover from. Here are some specific examples. For the first example, let's say your account balance starts with 15,000, but your equity dropped 49,000 due to some market losses. You allowed to lose another 2,000 before your account hit that a critical 57,000 threshold, and it automatically closed. The next case, now if you're doing well and your equity rise up to the 51,000, you got some extra cushion. At this point, you're allowed to load up to 4,000 before your account hit the same 47,000 limit. To figure out where you stand, the maximum lot limit is calculated by adding the sum of your closed position and factoring in any open position that are still running. Your trading dashboard will show two key metrics: max permitted losses, which is how much you're allowed to lose overall, and remaining losses, which is the loss left before your account is closed. Now, what happens if you hit that limit? Well, unfortunately, if your equity hits the maximum loss limit, the system will automatically close your account for the day, or your open position will liquidate whether they profitable or not, and you will able to trade for the rest of the day. To resume trading, you would need to purchase a new trading package.
Thanks, Helen. That definitely helps clarify the nuts and bolts of the maximum loss limit. It's kind of like a safety buffer, isn't it? It's there to keep you from spiraling out of control, especially when markets get volatile. Now, I imagine this rule impacts different traders in different ways, whether you're a cautious trader who keeps their risk low or a more aggressive trader trying to maximize profits. This limit is one of those things you can't afford to ignore. Let's bring Rav, our risk management expert. Rav, what do you think are the most common mistakes traders make when it comes to managing their maximum loss limit? And more importantly, what strategy can traders implement to ensure they never get too close to it?
Great question, Scarlett. You are absolutely right. No matter what type of trader you are, ignoring the maximum loss limit can be costly. In fact, it's one of those things that sneak up on traders who aren't paying attention to the long-term pictures. And I would say the most common mistake is underestimating how quickly cumulative losses can add up over multiple trades. Here are some key strategies I recommend to stay within your maximum loss limit. The first one is set stop loss order on every trade. This is your first line of defense. Setting a stop loss means you are deciding in advance how much you are willing to lose on a particular trade. The system will automatically close your trade if it hits that number, which protects you from letting a losing trade get out of hand. For example, if you're only willing to lose $500 on a particular trade, you set that as your stop loss, and you won't have to worry about it spiraling.
I love that it's like putting a safety belt on each trade. Once you're locked in, that stop loss is out of your hand.
Exactly, it's all about discipline. The next one is to manage your position sizing. This is a big one. Often traders, especially new ones, get carried away by putting too much capital into a single trade. But when you risk too much, you also risk losing a larger percentage of your account if the trade goes south. A good rule of thumb is to risk no more than 1 to 2% of your total account balance on any single trade. For example, if your account balance is $50,000, you should only risk around $500 to $1,000 per trade. This keeps your potential losses manageable and well within your limit.
That makes total sense. You're not putting all of your eggs in one package, and it gives you more room to breathe, right?
Exactly, Scarlett. It's all about spreading the risk so you don't take too big of a hit on any one trade. The next one is to monitor your account equity regularly. This may sound basic, but it's incredibly important to keep an eye on your account equity throughout the day. It's easy to get caught up in the market highs and lows, but if you should always be aware of how close you are to the maximum loss limit. Your dashboard makes it easy to check your remaining loss, so use it. If you see that you are getting close to the limit, it's time to take a step back and re-evaluate your strategies.
It's almost like watching a fuel gauge. You don't want to be driving on fumes without knowing it.
Exactly, and no one wants to get stuck on the side of the road. Having a well thought out trading plan is one of the most powerful tools in trader arsenal. This plan should outline not only your profit goal but also your risk management rules. For example, if you have a few losing trades in a row, does your plan tell you to take a break and reset or change your strategy? The idea is to have a reset series of rules so you don't make impulsive decisions in haste of the moment.
It's like having a roadmap, right? You know where you're going, you have contingency plans for when things don't go as expected.
Exactly, the market can be unpredictable, but a solid plan keeps you grounded. Even the best life plan needs to be reviewed and tweaked from time to time. If you find that you're approaching your maximum loss limit too often, it may be a sign that your risk management strategy needs adjusting. Maybe you need to tighten your stop losses or reduce your trade size. The key to stay flexible and adapt to changing market conditions while always keep your risk in check.
That's great advice, Helen. It's all about constant improvement. You can't just sit in and forget it. You got to be ready to adjust based on your results and the market.
Absolutely, Scarlett. Trading is dynamic and your strategy should be too.
Alright, thank you for the fantastic breakdown of the maximum loss limit, Rev and Helen. This leads us to perfectly into our next key topic, the profit consistency rule. This rule is critical for ensuring long-term, sustainable success in trading as it helps measure and maintain consistency in your profit. Now, to give us a clearer picture of how the profit consistency rule works and why it's important, let's turn to Rev. Rev, can you break down the rule for us and how is it calculated and why is it important for traders to focus on the consistency rather than just aiming for big wins?
Of course, Scarlett, the profit consistency rule is a powerful metric that helps you understand how stable your profits are over time. It's not just able to making big gains on 1 or 2 good days, it's about being consistent day in and day out. So here's how the profit consistency rule is calculated. You take your highest single day profit and divide it by the total on your profits and losses over a given period, usually a month or a quarter. You then express the result as a percentage. Let's go through an example. Say your best day brought in $200 in profit, but over the month your total profits and losses add up to $410. In that case, your profit consistency ratio would be about 48.7%. This ratio shows how much of your performance comes from one standout day. Ideally, you want this percentage to be lower, under 20%, because that means your profits are more evenly spread out across all your trading days. Now, why is it this important? A low profit consistency ratio indicates that you are not just relying on a couple of big wins to stay profitable. Instead, you are showing that your strategy works consistently over time, even on those days when the market isn't giving you big wins. This kind of consistency is the hallmark of a successful long-term trader.
That's great explanation, Raf. So just to clarify, a lower ratio means you're more likely to make steady gains rather than being overly dependent on a few good days, right?
Exactly, Scarlett. When you're too reliant on just a few big wins, it often means that your strategy is risky or inconsistent. You could go through your long stretches where you are not making much money or even losing it. But if your profit consistency ratio is low, it shows that your performance is smoother and that your trading is more predictable and stable over time.
That's incredibly insightful, and it seems like a critical motive for any trader who's serious about long-term success, right?
Exactly, consistency is the key to sustainable profitability. Big wins are great, but if they are followed by big losses or long period of break-even trading, it's hard to maintain momentum. With the profit consistency rule, traders can keep an eye on how reliable their strategy is over time.
Awesome. Now we got a solid understanding of what the profit consistency rule is, and let's dig into some practical strategy to help traders maintain a low ratio, ideally under 20%. Helen, I know you got some great tips for us. Can you walk us through some techniques that traders can use to stay consistent and ensure their ratio stay in check?
Absolutely, Scarlett. The profit consistency ratio is a powerful indicator, but it takes careful management to keep it low. So let's talk about some practical ways traders can improve their consistency and avoid becoming too dependent on those rare big wins. One of the most effective strategies to keep your profit consistency ratio low is to diversify your trade. This means spreading your investment across different markets, asset classes, or even trading strategy. If you only trade one market, say forex or stock, you risk being too reliant on that market performance. By diversifying, you reduce the impact of any single loss and create more stability in your overall performance.
That makes a lot of sense. So, if I'm only trading in, let's say, the US stock market, a bad week will really hit my profit consistency hard. But by adding trades in, for example, commodities or forex, I could balance out some of the risk, right?
Exactly, Scarlett. It's all about balance. When one market isn't performing well, another market may be doing better. This way, your overall performance stays smoother and you are not relying on just one or two trades to pull your through. Next up is position sizing. One of the biggest mistakes traders make over leveraging. Taking on position does add to luck, limited your their account balance. For example, if you have the 10,000 account, putting the 5,000 into a single trade is risky because if that trade goes south, you could lose a significant portion of your capital. Instead, aim to keep your position size small and manageable, say no more than 1 from 2% of your account balance per trade. Distribute your risk and have ensured that losses don't overwhelm your profits.
Right, so it's not just about making the right trades, but also making sure you're not putting too much of your capital at risk on any single trade. Smaller, more controlled trades lead to steadier results over time, right?
Exactly. By managing position sizing, you prevent any single trade from having too much impact on your overall performance. It's all about control and discipline. Another crucial element is having a well-defined trading plan. Without a plan, it's easy to get caught up in emotion of trading, whether that's the excitement of potential win or the panic of suddenly loss. A solid plan outlines exactly when you enter a trade, you will asset and how much risk you are willing to take. Having a deal rule in place keep your routers and have ensured that your trading decisions are consistent, which in turn help keep your profit consistency ratio in check.
That's a really good point. A lot of traders, especially new ones, probably jump into trades without a solid plan and end up making emotional decisions, right?
Absolutely, scholars. It's so easy to get emotional in heads-up moment, but if you have a plan, it's much easier to stay in discipline and avoid impulsive trade that could hurt you or your performance. This brings us to stop loss order. A stop loss is an automatic asset that you set up to close a trade if you move against you. This helps to cap your losses on any single trade and protect your account balance. By using stop loss order, you can avoid those catastrophic losses that can throw up your profit consistency.
I like the idea of using stop orders. It sounds like a way to take the emotion out of the decision-making process.
Exactly, it's like setting up. Once your stop loss is in place, you don't have to worry about watching trade 24 hours 7. If your thing goes south, the stop loss take you out of the trade automatically, helping you stick your plan and avoid large unexpected losses. Another important strategy is to regularly review your performance. Just because you start up a solid plan and strategies doesn't mean you should put everything on autopilot. It's crucial to track your trade, see what's working and make adjustments as needed. You might find that certain markets or strategies are delivering more consistent results than others. By keeping a close eye on your performance, you can tweak your approach and improve your consistency over time.
Wow. Uh, well, so it's like performing maintenance on your trading strategy, always looking for ways to optimize and improve.
Exactly, just like car needs regular tune-up, your trading plan does too. Continuous improvements is key to keeping your profit steady. And finally, and this is a big one, avoid emotional trading. Whether it's fear after a loss or overconfidence after a win, emotion can lead to poor decision making. If you stick your strategy and avoid chasing losses or getting overly excited after a good day, you see much more consistent results.
That's such an important point. Staying calm and disciplined even when the market is going crazy is easier said than done though, right?
It definitely takes a practice, but staying level-headed is crucial for a long-term success. If you can control your emotion and stick your plan, you will be far more likely to maintain consistent profit.
Thank you, Helen, for those really insightful tips. So next up, we will have a little short break, and next up we will have a talk about a crucial aspect of effective trading.
Vậy thôi ngay từ đầu đi má. Vô.
Alright trader, welcome back, and next up we will dive into a crucial aspect of effective trading, the risk consistency rule. This rule is key to maintaining both stability and long-term profitability in your trading account. Helen, I know you got a great way to explain it. Can you walk us through what the risk consistency rule is and why it's so important for traders to follow?
Now let me take on this one. Sure thing. The risk consistency rule is all about ensuring that you manage your risk in a disciplined, consistent manner. It limits the risk per trade to no more than 2% of your initial account balance. This is really important because it prevents large swings in your equity and helps mitigate the risk of significant losses due to sudden market movement or unexpected events. Let's break it down a little more. First, on maximum risk per trade ideas, you shouldn't risk more than 2% of your initial balance on any single trade idea. This includes any floating losses, so you need to factor in on potential exposures. The next one is trade idea definitions. Multiple trades on the same assets in the same direction are considered a single trade idea. On the other hand, trades on different assets or in opposite directions are treated as separate ideas. For example, if you open several positions on gold buy, they would count as one trade idea, and the combined risk must remain under 2%. But if you have a gold buy and GBY sell, they are treated as two separate ideas, each with their own 2% risk limit. Following this rule smooths out your equity curve, encouraging disciplined trading, and most importantly, reducing the chances of massive losses.
Thanks, Brad. That's a really helpful overview. Now, let me throw this back to our audience for a second. Traders, have any of you ever found it tricky to stick to the risk consistency rule? How does it feel to have those risk limits in place, and does it ever get in the way of your trading strategy?
Absolutely, Scarlett. The main point is to remember about the risk consistency rules are first, risk per trade idea. Stick to risking no more than 2% of your initial account balance on any single trade idea. This keeps potential losses manageable and ensure you don't risk too much on any one trade. Next is the single trade ideas. If you are opening multiple trades on the same assets and in the same directions, they count as one trade idea. So your combined risk must stay within that 2%. And the last one, separate trade ideas. Trades on different assets or in different directions are considered separate ideas. Each of these can have its own 2% risk, but be mindful to keep track of them. And why does this matter? It stabilizes your equity curve by preventing huge swings in your account balance. It promotes discipline by encouraging traders to think more carefully about their risk. And most importantly, it reduces the risk of major losses that can really hurt your overall performance. So in short, adhering to this rule helps keep your trading account safer and support long-term success.
Great, Brad. Now you know some of you might be wondering how to make sure you actually stick to this rule. So let's shift gears and get into some practical strategy for making it easier to follow. Helen, could you share a few tips on how traders can stay disciplined and avoid breaking the risk consistency rule?
Of course, Scarlett, thinking the risk consistency rule takes some planning and discipline, but it's totally doable with the right strategy in place. Here are a few key tips. For the first one, define risk limit. First and foremost, clearly set your maximum risk per trade idea to stay within the 2% limit. You can use risk management tool or calculator to help with it. Most platforms have a built-in tool that allow you to automate risk limit.
That's a good point. Having that automation takes a lot of pressure off, right? No need to constantly double check that your platform does the heavy lifting.
Exactly, it makes it so much easier to stick to your risk limits when the platform is handling the number for you. The next one, monitor position sizing. It's also important to keep track of the total risk of multiple trades on the same asset. For instance, if you open several positions by gold buy, make sure the combined rate for all of those trades doesn't exceed 2%. This is why traders sometimes leave up. They open multiple positions without realizing that combined they risk more than they intended.
So even though the trades are technically separate, if they are on the same assets, you got to look at them as one entity, right?
Exactly. Treat them as one idea because they are exposed to the same market movement. The next one, separate trade idea. Speaking of different trade, it's equally important to treat trade on different assets or in opposite direction as separate ideas. This way you can manage it trade risk individually without exceeding the 2% rule on any trade, a single trade.
Right, so you could be running a gold buy and a GBP while sell at the same time without violating this rule, as long as you manage the risk for each one separately.
Exactly, just make sure you're keeping an eye on risk for each idea individually. The next one, your risk management tool. I also recommend using risk management feature that many trading platforms offer, like automatic position sizing or stop loss order. Their tool can help control your exposure and prevent you from overextending your risk.
And I imagine these tools really help prevent the movements when you're tempted to take on too much risk in the heat of the movement, right?
Absolutely, it takes the emotions out of the equation and help you stay disciplined. The next one, regularly review trades. Lastly, make it a habit to regularly review your trading activity. This is something a lot of traders neglect. Reviewing your trade helps ensure that your risk per trade idea remains within the set limits. And if you notice any pattern or area where you're taking on too much risk, you can adjust your strategy to stay compliant.
It sounds like regular check-ins are crucial to spotting potential issues before they become big problems.
Exactly, Scarlett. It's all about staying proactive.
Great tips, Helen. Now I'd like to move on to an important update regarding how we handle risk consistency rule violations. If an account is terminated due to breaking this rule for the first time, expect for those on no BC package, there are now two options available for customer. First, they can choose to reset the account to its initial balance, which gives them a fresh start. Alternatively, they can choose to reactivate their current account, keeping the existing balance and setting intact. Alright, I think that covers it. Let's make sure we applying these risk management strategies and taking advantage of the new options available for account management. Thanks, Raf and Helen, for your insights. Now, next up, we will walk you through our streamlined payout process. At WeMasterTrade, we believe in making it as easy as possible for you to access to your hard-earned profits. We offer various options for receiving your payouts, including bank transfers, PayPal, and cryptocurrency like USDT. The choice is yours, ensuring flexibility and convenience.
Our payout process is both fast and secure. After you make a profit and met the payout requirements, you can simply log into your account, request a payout, and follow the on-screen instructions. Our team will process your request promptly, and in most cases, you can expect to receive your funds within 24 hours. It's that simple. And if you ever run into any issues or have questions about your payout, our customer service team is always here to help. You can reach us via live chat, email, or through our support ticket system on the website. We are committed to ensuring a smooth and hassle-free experience for all our traders.
And transparency is a key part of our philosophy, and that's why we're always here to answer any question you might have about your account or the payout process. Feel free to ask in the comments, and we'll address your queries as we go. Next up, we will introduce you to one of our very powerful tools, the financial instrument list of WeMasterTrade. I hope that Helen could help us understand more about this.
Welcome to the simple overview page of WeMasterTrade. Here you can explore a comprehensive list of financial instruments available for trading, include cryptocurrencies, forex, stock, metal, energy, and indicators. Our platform offers clients the opportunity to trade with the more account using virtual funds, and we also utilize our team to copy your trade to our live trading account. On this way, you will find detailed specification for a trading symbol, include contract size, margin percentage, leverage option, and commission detail. It's important to note that due to the market fluctuation, some symbols may not always be available for trading.
Thank you, Helen. And our vision is to foster a driven community of elite professional traders, positioning WeMasterTrade.com as the go-to platform for anyone serious about advancing their trading career. Whether you just get started or have years of experience under your belt, we're committed to provide opportunities and resources that help you succeed at every stage of your trading journey. At WeMasterTrade, we understand that each trader needs are different, and we are here to support you with tools, insights, and personalized packages that cater to your specific trading goals. And if you're ready to take your trading to the next level, you'll definitely want to stick around to hear about the exciting offers we got lined up. The new promotion plan we are unveiling today is specially designed to help traders get more out of their experience with WeMasterTrade and WeMasterTrade.com. We are focused on creating more opportunities for growth, increased profitability, and long-term success, no matter where you are on your trading journey.
With that said, let's jump into our first promotion, which is exclusively available to our WeMasterTrade affiliate partners, the AB0 package. This package is designed to help you unlock even greater potential with WeMasterTrade, offering unique benefits and features that can really boost your performance. The AB0 package presents an incredible opportunity tailored specifically for our WeMasterTrade affiliate partners. Here are the key details. The package is named AB0, costs just $3, falls under the 510 category, and comes with an account balance of $30,000. To qualify for this package, customers need to complete the KYC process and sign up for our AB program, which helps create a secure and convenient trading experience for all participants. When it comes to payment terms, profit sharing allows you to earn up to 50% of your profits. For instance, if you generate a 10% profit amounting to $3,000, your potential share could be up to $1,500. You can acquire as many packages as you wish. However, only one can be active at a time. After closing an account, you are eligible for a new package. There are no limits on the number of payments you can receive, but keep in mind that account hitting the payment threshold cannot withdraw funds until certain customer referral conditions are satisfied. This package is a fantastic way to kickstart your trading journey with a significant balance while minimizing your initial investment, making it perfect for those wanting to explore our platform with reduced financial risk.
Thank you, Ralph. And alright, and for traders who are looking for ways to get more of your profits, well, today we have an exciting update that will help you increase your earnings without changing your trading style. It's all about boosting your profit split by simply choosing the right funding package. And Helen will break it all down for you.
Oh wow, this new update is something that every trader should know about. When you put in the effort to grow your account, wouldn't it be amazing to actually keep more of what you earn? Well, now with this new profit sharing booth, that's exactly what's happening.
Absolutely, Helen. I know that one of the most common frustrations in trading is feeling like your hard work isn't rewarded enough. But now, with these bonus profit sharing features, you can actually increase the percentage of profits you keep. It's a total game changer.
Alright, let's get straight into the details. Here's how you can push your profit split and earn more. So when you invest on an instant funding package with over $175, you will get 1% bonus profit sharing, and with over $350, you will get 3% of bonus profit sharing, and with over $500, you will get 5% bonus profit sharing. Now, Helen, can you help break this down with a real example?
Of course, let's take a look at the 500 funding package. Normally, with instant funding, you start with 50% profit share, meaning that for every 1,000 in your profit you make, you get 500. But with the new promotion, when you choose a package over the 500, your profit share jump from the 50% to 55%. That means instead of taking home 500 from that 1,000 profit, you now keep the 515. Now, why does my you seem like small chance at first? Think about how much that add up over time, especially for consistent trader. So inside the bigger the packets, the bigger your profit share both.
Exactly, Helen. And traders, here's why this is such a smart move. Let's say you are someone who trades consistently and make $5,000 in profits over time. With a standard 50% profit share, you would walk away with $2,500. But with the 55% boost, you now keep $2,750. That's an extra $250 in your pocket for simply choosing the right package. And the best part? There is no extra effort required. You don't have to change your strategies or take unnecessary risks. All you need to do is select a higher funding package and you will instantly start earning more from the same trades.
Now, some of you might be wondering why is this such a big deal for traders? Let's hear from Helen from this.
Great questions, Wallace. As trader, our goal is always maximize return while minimizing risk. The best way to grow your account is to keep reinvesting your profits, but that's only possible if you're getting a bigger share of what you earn. With a higher profit share, you can scale up further, compound your earning, and have more capital to work with for your next trades. Think about it. If you keep a larger percentage of your profit, you have more flexibility to diversify your trade, try new strategies, and even withdraw more funds. This is especially important for those who want to trade for the long term. Over time, there's more percentage increase add up to thousands of extra dollars. So, if you're someone who takes trading seriously, this is a huge opportunity to level up your earning.
That's such an important point, Helen. And from a psychological perspective, knowing that you are earning more per trade can actually help you stay disciplined and focused. Instead of overtrading or taking unnecessary risks to hit bigger profits, you can trade smarter because you're already keeping a bigger share of what you make. Plus, this isn't just about individual benefits. The more traders take advantage of this offer, the stronger our trading community becomes. More capital means better trading conditions, more opportunities, and a stronger ecosystem for everyone.
Alright traders, you heard it from the expert. This bonus profit sharing offer is your chance to increase your earning without changing your trading style. All you need to do is choose the right funding package and you'll instantly push your profit split. So all you need to do is visit our website WeMasterTrade.com now and grab your instant funding package.
Guys, this is an opportunity you don't want to miss. The market is all about making smart decisions, and this is one of the easiest ways to maximize your return. If you're serious about your trading journey, this is a no-brainer. Don't wait too long because opportunities like this don't come every day.
Alright, thank you Helen. And now we will move to our next promotions. We have some exciting news for you today, an exclusive event that will help you withdraw more profits under easier conditions. This is your chance to push your earning without making major changes to your trading strategy, and Helen will break it down everything you need to know.
Okay, I'm so excited about this event because it's really designed to help traders maximize their withdrawal. A lot of traders work hard to hit their targets, and now with their new rule, it's going to be much easier to take home more profit. And what I love about it is a whole opportunity for traders to scale up their earning. Whether you're a beginner or an experienced trader, this new withdrawal term are a game changer.
Alright, let's get into the details of this limited time event and what it means for you. So it will happen between February 25th and April 15th. And here's what's changing. If your profit consistency is between 20% to 30%, you will get 25% profit sharing and reduce profit share consistency to just 20%, and you can get up to 90% profit sharing.
Let's take a moment to break that down because it's a whole. Normally, traders need to maintain a higher profit consistency to qualify for certain profit sharing percentage. But during this event, even if your profit consistency is just 20%, you can unlock up to the 90% profit sharing. To put in the perspective, let's say you have a profit consistency of the 22%. Under normal conditions, you might only get a standard payout. But now, during this event, you are eligible for a much higher percentage of your profits. It's basically giving you a shortcut to bigger payout.
Exactly, Helen. This means traders don't have to stress about hitting super high consistency numbers to qualify for great withdrawals. If you are a trader who sometimes struggles with maintaining consistency about 30%, this event gives you a much more achievable path to higher earnings. For example, if you're trading with a 50,000 account and you make $10,000 in profit, instead of worrying about hitting extreme consistency levels, now you can withdraw a larger percentage much more easily. It's an amazing opportunity.
Now let's talk about eligibility, who qualifies for this event, and here's the breakdown. It applies to accounts purchased from now GMT plus 2 time onward, and you must have purchased a package and requested a withdrawal during the event period. Only the for packages that have profit consistency rule and applies to accounts with a balance of $50,000 or below.
So, if you're a new trader trying WeMasterTrade or if you're planning to upgrade your account, this event is designed for you. As long as your account meets the condition, you're available for easier withdrawal and higher profit sharing. This is a huge advantage, especially for traders with account of 15,000 and below, because it means you can grow your capital faster while keeping more of your profit. And for traders who have been waiting for the right time to start, this is it. If you've been consider purchasing a package, you should do it now so you can benefit from a limited time event.
And Ralph, as someone who has been trading for a while, why is this event so important?
Well, this event is super important because it removes one of the biggest challenges traders face, profit consistency requirements. Let's be real, even the best traders have some ups and downs in their consistency, but now with this event, WeMasterTrade is making it easier for everyone to withdraw their profits with less pressures. What I also love is that this isn't just for advanced traders. Even if you are still learning and working on your consistency, you still get to benefit from higher payouts without the usual strict rules.
That's exactly right. And let's not forget, trading in a long-term game, the ability to withdraw more profits early on means you have a more flexibility in reverse, scale up, or take some well-earned payouts. More freedom means better decision making, less stress, and more growth as a trader.
Alright trader, you heard it from Helen and Ralph. This event is your chance to increase your earnings, withdraw more, and take advantage of easier conditions. Don't wait, the event runs from February 25th to April 15th, so now is the perfect time to upgrade your trading plan and make the most of this opportunity. If you haven't purchased a package yet, now is the time. And if you already have an account and are planning to withdraw, take advantage of these new conditions.
Trust me, this is an opportunity you don't want to miss. We don't always get events like this where conditions are this favorable, so take action while it's still available.
Thank you, Helen, for those valuable insights. It's clear that these promotions are tailored to provide maximum benefit. Whether you are a novice or a seasoned trader, at WeMasterTrade, we are committed to supporting our traders at every stage of their journey. And remember, everyone, these offers are quickly available, but they won't last forever. Make sure to take advantage of them while you can. And if you have any question about these packages or need further assistance, our customer service team is always here to help. Just reach out and we'll guide you through the process. And next up, we will talk about the calendar news.
So this report analyzes key economic events scheduled for April the 3rd and their potential impact on financial markets, investors, traders, and economists. The day's events include high-impact U.S. data, Swiss inflation figures, and OPEC GMMC meetings, all of which could influence global markets. For the first event, the USD high-impact events, first of all, President Trump speaks. Political speeches by former or current U.S. presidents can influence markets, especially if they touch on economic policies, trade relations, or the Federal Reserve. If Trump criticizes the Fed or suggests major fiscal policy changes, markets may react with increased volatility. If his speech focuses on geopolitical issues, trade trafficking, or economic risk, it could create uncertainty and trigger a risk of sentiment, leading to USD strength as a safe haven asset. For the impact, hawkish or pro-business rhetoric, bullish for USD stock price, political uncertainty or Fed criticism, bearish for USD, increased market volatility. For the next event, Switzerland Consumer Price Index, which is CPI, measures inflation. The fact that inflation stagnated instead of rising as expected suggests that price pressures have weakened. This may prompt the Swiss National Bank to maintain a dovish stance, reducing expectations for interest rate hikes. A lower than expected CPI can weaken the CFH, making Swiss support more competitive, but also reducing investor appetite for currencies. For the impact, weakened CHF due to lower inflation, Swiss stock may rise as lower inflation reduces pressures on businesses. Forex traders might see CHF weakening against stronger currencies like USD and Euro. For the next event, the global oil market impact. OPEC joint ministerial monitoring committee meetings are critical for oil markets. If OPEC signals production cuts, it can push oil prices higher, benefiting oil-producing countries and energy stocks. Conversely, if OPEC hints at increased production, oil prices could fall, affecting inflation expectations globally. Investors and traders should closely watch statements regarding supply-demand forecasts, geopolitical risk, and production adjustment. For the impact, oil prices up, bullish for oil stock, CAD, and energy-driven economies. Oil prices down, bearish for oil-dependent assets, but positive for global inflation control. And for the next event, the ISM Services PMI. The ISM Services PMI is more influential than the final service PMI because it comes from a broader survey. A slight drop from 53.5 to 53 suggests marginal weakening in the services sector, while the reading is still above 50. The decline may indicate that economic momentum is slowing. Investors will watch how this aligns with other economic indicators before making significant adjustments. For the impact, slightly bearish for USD as services sector activity slow. Stock market might react mildly, but no major downturn is expected. For the summary, first of all, the Trump speech could drive market volatility, especially if he comments on the Fed, trade, or geopolitical issues. Swiss CPI was weaker than expected. The OPEC GMMC meeting could influence oil prices, impacting inflation expectations. Unemployment claims remain stable, keeping the U.S. labor market outlook strong. Services PMI data show mild weakness, but the sector remains in expansion mode. That's the end for the calendar.
Thank you, Ra, and that's wrap up today's session on trading with WeMasterTrade, we cover a lot from how our trading rules is and the pros and cons, the risk management and the strategy for success, and the most important, our promotion. Remember, trading is a journey, not a sprint. So you need to stay disciplined and stick to your risk management plan and keep learning. If you found this session helpful, be sure to like, subscribe, and follow for more content. And if you have any question or want to continue the discussion, drop them in the comments or join our community on Discord or Telegram. Thanks for being here, and I'll see you in the next section. Happy trading!
We copy trade.